Good morning, everyone. Good morning, everybody. Mona again. This time we're going to have an interesting panel discussion around investments and AI and RegTech. And I will let further leave up to Shiwen, who is going to introduce the panel. And I'm looking forward to it. Thank you, Shiwen. Floor is yours.
Thank you very much, Mona. Now, welcome, good morning to everybody listening in from Europe, Asia, and across the world. We've assembled, I think, a very interesting group of investors to speak, or people who are working in the investment space to speak on the impact of investment on the potential innovation acceleration in the RegTech space. But also, I think we cannot discuss this without the overlap with AI, especially since there's so much algorithmic use and in today's systems. So just introducing our panelists briefly, I'd like to introduce Mr. Evan Thorpe from SixThirty Ventures. That's a US headquartered venture capital fund. Evan is based out of Hong Kong, but the APAC office is in Singapore. And prior to joining the investment space, he was working for a RegTech startup called Droid, and prior to that was a fintech D-Logic. Our other panelist is Miss Ine Jacobsen from Cocoon Capital, an early-stage venture capital fund covering B2B and enterprise software. That's based out of Singapore. Previously, she was working in the compliance role with PwC within auditing and risk management. And our final panelist is Mr. John Lee, the co-founder of Alchemist Chemical Partners, based out of Australia, that specializes in mergers and acquisitions and also engages companies to help them raise debt to equity financing across the Australia and Southeast Asia. So I think diving straight into it, Evan, Ine, John, anything to add about yourselves? All good.
No, good. Privileged to be here.
All good, great. So just diving straight into it, I think what are you seeing that has really driven the evolution of RegTech in the last few years? Last time, if we go back a few years, we can see that it was really not in the radar because people were just seeing it as this subsector in the fintech space. But now it's evolving and it's reached a critical mass that it's now its own category. What are some of the forces that have driven it? Would you like to start, Evan?
Yeah, sure. Happy to, Shiwen, and yeah, echo John's sentiments for thanking the team here at RegPac for including me in this. I think when we think about what some of those drivers that have really kind of put RegTech on the map, from an investor's perspective, we definitely think about various opportunities to invest in early stage companies and the founding teams that are building them. And RegTech has shown up more and more as kind of either a subcategory or a category unto itself more and more because of that old saying or old saw from investors around like, is this company or this proposition or this team solving a real problem, right? Or if it doesn't solve a real problem necessarily, does it significantly alleviate in some way some very large burden, right? And if the answer to that question is yes, then that's an important factor in considering the attractiveness of the company and mapping it to the venture format. So I think the fact that regulation, compliance with them, and all the activity that goes around that, all the energy, the capital, et cetera, that kind of goes with that, it does tick that box. It does mean that the answer to that question is yes, this does solve a real problem. And so because RegTech has achieved that, I'd say it's earned this place on kind of the broad market map of venture capital investable categories.
Yeah, and I just wanted to say thanks for having me as well on the panel. And I have to agree with Evan. I think what's also interesting is that with fintech having such a big space in the in investment overall, you see this, you see the process behind the fintech as well being commoditized in a way where you're able to really look at the process and break it down. And so much of the process is now tokenized or commoditized. And then RegTech has suddenly an ability to kind of come in and take part of that process. And fintechs are able to use RegTech companies and you see these infrastructure as a service companies and then they can then exponentially grow quicker because they don't have to build that whole process themselves. So I think that's a really interesting thing that we're seeing. And we've seen that our fintech companies as well can utilize this to really grow and move a lot quicker. So I think that's also helped this evolution.
John, what's your take on the entire matter, given the state of Australia's own fintech and RegTech sectors?
Yeah, great start to the session. I love this question because it really makes us think about, as investors who are listening and those who are thinking of starting, really ramping up whether RegTech is an option. And to me, it's how it's become from the background, say just in backdrop of fintech, to the foreground, is because a lot more people these days, and you may find yourself reading terms and conditions for almost 10 times more just because we're downloading more apps and we're just being promoted more apps. So we're finding a lot more use beyond financial services, including software, like gaming apps, energy, technology and apps, and telecommunications, as well as medical. So we've got a lot of different industries. RegTech, if it becomes an entity itself, it can serve many industries at once. So that's where I've seen the explosive conversation, if not just growth, of the RegTech space.
Interesting. So I think tapping on that point, we've seen that RegTech is evolving because every new development is going through these different phases, from awareness to acceptance, and now there's a need for it because in Europe we are seeing, in the EU, the GDPR. In China, there's this crackdown on the tech companies there because, of course, I think there's a competition. There's an awareness now that there's this need for privacy and security around a lot of this sensitive data, which you touched upon. Payments, medical records, medtech. But perhaps what are some of the other untapped applications for the cognitive computing and algorithms behind what we're seeing beyond financial services? How can RegTech's cognitive computing and behavioral algorithms go beyond, as you've mentioned, in gaming and payments elsewhere?
Yeah, so in Australia, we found that we are one of the most compliance-friendly, as in like the people are open to read the terms and conditions and not steer too much away from it. We're pretty low-key, we want to stay within those boundaries. So as you can imagine, there's lots of physical documents in the past from government and lots of enterprises. We don't need to transfer that into a translatable, translate that into applications in digital space. So inside of that, I guess the innovation there would be, how can you when you create a product, which part of the regulation do you need to attend to? And so that's part of the intelligence that are coming up. I know we're touching on AI very soon, is where if you can have exactly the regulations you need and just enough compliance so that you don't bombard too much information with the end user, then it's part of the user experience that, we trust this company, we trust that they have done their research and they're compliant with whatever makes the application or the use case safe and within the right boundaries.
Thanks for that. Ine, I think at Cocoon Capital, you've invested into, I think, a number of SaaS companies in your portfolio, as well as deep tech companies as well. What have you seen in that space that you could see a potential growth area for some of your portfolio firms into the RegTech space?
Well, I think so. The way that we approach it, it's kind of what Evan was saying in the beginning. Are the teams solving a problem? Because we invest so early, so we're pre-seed and seed. So sometimes the founders come to us pre-product. They are always pre-revenue. So things change a lot in that time frame, and so we try not to focus too much on the technology because the technology is just going to solve a problem. So what we see is that if the problem is interesting enough, if CEOs, if directors, if people that are high up in a company, can't sleep at night because of this problem, we know that people want to solve it. And then it doesn't really matter necessarily what technology, you're just going to use whatever technology gets you to the best solution. So I also think that that's, you see companies that start out thinking they will apply a specific technology, and that changes, right? Because the landscape and the industry changes so quickly. So you can start out thinking that you're going to use this application, and then that at the end you're able to do something completely different because things have changed so much in the time span of 2 years. So I think we try not to focus too much. We don't like to invest in technologies looking for a problem. We like to invest in problems looking for a technology, if that makes sense.
Yeah, that's a really good point. And I'd echo those sentiments, and it connects back a bit to what John was alluding earlier to around kind of some of the horizontal applications that some of these companies are going after, and the extensibility, that you're referring to. The advancements a lot of the RegTech companies that we see in the space, especially at that early stage, is this hypothesis that they're testing about what they can do in the short term and what that means for kind of the medium and long term. And as they're building out the technology that would actually underpin that, one of the things that's going through our heads when we're evaluating the opportunity is, that the company needs to ask themselves, are they a regulatory-faced or regulatory-focused company with an AI engine underneath to kind of power that? Or are they more of a horizontal AI company, or it doesn't have to be AI, but a horizontal, could be NPL or NLP or whatever other kind of horizontal capability. Are they that kind of technology company that is very horizontally oriented, but just happens to have some very immediate applications in regulatory fields? I know for me personally, like I've come across a lot of companies that have tried to be just kind of one or the other, and the good ones make sure that they're not trying to be both or have their cake and eat it too. I think they have to be honest with themselves when they examine their value proposition, to look themselves in the mirror. And I think it's really the jumping off point for the startup is, sometimes better to be the latter. I mean, obviously it's better to be whoever you are, but there's a real attractiveness, I think, from a VC standpoint, that if you're an AI company with a very clear regulatory facing capability, then there's naturally going to be that extensibility, as Ine pointed out, to where can this persist in kind of other domains, other jurisdictions, other geographies, et cetera. And that's what I think makes the difference between an investment that is interesting and one that is like very, very hot and exciting.
Muted myself. Thank you for that, Evan. Now, I think, Ine, John, before you go further, do you have any perhaps perspectives to share on what Evan has discussed?
No, I think Evan summed up very well. Of course, the horizontal applications and implications are pretty much what we're going to go into, the forces driving that.
I think I'm going to touch upon, as going forward in this conversation. Really, this is everyone's favorite topic. It's the global pandemic, COVID, has really increased the need for digitalization, and also I guess it's highlighted that there's a need and acceptance for regulations overall. So from the investment perspective, what has this opened up in the RegTech space? What are the possibilities that you're seeing now that are coming your way in your deal pipelines?
Yeah, I'd say one thing that I've seen, Shiwen, is maybe the negative side to that, which was that one thing that I think we've seen a lot of in certain jurisdictions, and you can't paint all jurisdictions and how they've kind of addressed some of the problems to do with or extending from the pandemic, with the same brush. But I do think that in some ways there were opportunities for startups before to jump into opportunities that were left maybe a little bit neglected or maybe a gray area for regulation, and they could step in where a government or a regulator maybe wasn't necessarily resourcing those problems. Well, now that door isn't necessarily as open as much, or at least it's not as convenient because a lot of governments have been very proactive in pursuing that. I think there is another side of that argument for sure, but I think that broadly, there's a lot of this is coming out of necessity, right? So on the tech side, the acceleration of cloud migration and kind of all of the personal health data that might be kind of floating around and in between and exchanged between different parties across different jurisdictions, the opportunity for RegTech and cybersecurity there, I think, is quite significant. But there just may not be as much low-hanging fruit. So maybe a little bit of a challenge for us around the table here who look at those very early stage opportunities that, there's really going to be.
Thanks for that, Evan. Ine, what's your take on the opportunities that have opened up?
Yeah, no, I think I agree with what Evan said. I think what can be interesting in the long run is that we've kind of seen how quickly things can change too, right? So you've been able to see how with the vaccines, for example, that if there is a willingness, there is a way, right? Unfortunately, we had to kind of get to this horrific point before people put enough money or enough resources behind it. So, but I think we've been able to see that we can work together. And I think that's, for the RegTech space, I think the global versus regional or local regulations is an interesting point. There is a lot of regulation that is global, which it's easier to scale, right? And so as VCs, we want to invest in really scalable businesses. And if you're approaching a global problem, then that's a lot more interesting. But then we see that there's all these local issues and local regulations that there's a huge benefit to solving, but the scale isn't as big. So perhaps, I think we had a discussion previously, and John mentioned this, it's like there's phases as well to the globalization. And I think that's an interesting thing to think about. Perhaps we can see that there is benefit to actually looking at the local regulations as well and see what's the commonality between those local regulations, and are there ways to come together on those and actually build products or services that can solve those problems.
Understood. I guess moving on from there, John, what's your take?
Well, one thing, we all know COVID has been a very unique experience, and never before I've seen government hold so much power or exercise its regulatory power, not directly or voluntarily, but as an effect. Many businesses had to shut down, especially, of course, the ones that require people to be met face to face. And so inside of that, every website, almost, and every shop, there's always a COVID sign, right? And if you look at regulation, it means that everyone had to attend to that. So what I've seen is that the RegTech is such a thing that people has accepted now as, let's check the terms and conditions to make sure this, before we go in, before we download this app to use, and we're going to to be in touch with people, get in contact, they actually are compliant, and the government is actually, they're safe from that. So inside of that, it's a very interesting trend. A lot of the startups that I've looked at, many of them, we're always asking the same question, like, in the space of COVID coming back or something similar, would they be able to survive? And I'm also listening from, how are they going to manage regulations in future? And so I think the reactive approach of regulations have not been very strong, because we don't know what can be stopped. But the proactiveness is very attractive now. So if you have your regulation and the technology that says we're compliant and we're partnered with some government body to be compliant ongoingly, it's become a much, that itself can push some valuations a lot higher than ever before.
Oh, thank you for that. Now, I think moving on from there, we have, there's a recent BCG report. Well, recent being, I think, earlier this year. And the three leading RegTech hubs mentioned, the UK, US, and Australia. Now, I think, this is followed by Canada, Singapore, Ireland, and Switzerland. But I think zooming into the Australian ecosystem, and perhaps this extends to Asia as well, there's a perception that there's a disconnect between the businesses and the investors, and that the entrepreneurs may recognize their potential, but that there's this perception in Australia that the investors are different, according to the BCG report. So I guess coming from the investment side, what are some of your thoughts on the matter?
Yeah, I can take a stab at this one, Shiwen. So the geography, or kind of the comparative hubs angle, is interesting. I probably personally spend more time and careful consideration on the other half of what you're bringing up around this interplay, around the dichotomy between the business perspective and the investor perspective, and where that may sometimes align and where maybe sometimes it doesn't. The investment team at our firm, definitely thinks about all opportunities in terms of balancing the consumability of the proposition and also the investability in the company delivering it. So, a startup, regardless of whether they term themselves as like a RegTech company that's powered by AI, or an AI company that's focused on regulatory applications, regardless of kind of how they position themselves, their solution still has to be consumable from the viewpoint of their end customer, right? So if this is an institution or some other kind of enterprise, the bar is quite high for, is this actually something that can be realistically absorbed and executed within that context, right? So we as investors look for that consumability side to certainly be there. It has to meet kind of the business requirements that you're describing, right? Not just the requirements, but also the broader context, right? So simultaneous to evaluating that, we're also considering in the same breath the investability in the company, right? So this ties back to what we've all been talking about before around, is it big enough? Does this fit the venture format, et cetera? And so, that's really what it comes down to, is, in short, is this a company that is right for the venture format, where the play is to, raise that early stage risk capital, grow fast, sell fast, get the flywheel going, and achieve some kind of growth and returns that will befit the VC format. So if they can't do that, then maybe it's nice that they're very consumable from the business perspective, but not necessarily investable from the investor perspective. So that's kind of how I think about that disconnect that you're describing.
Yeah, I agree, Evan, and I think it's interesting to see who are these RegTech companies serving, right? Because if they're serving governments or really large enterprises, there's a different growth and a different way to look at traction that investors like us usually maybe are not used to, or perhaps have a preference for other types of growth trajectories. So I think that's also an interesting thing to see. It might be, a lot of possibility there if you have patient enough capital to be able to sit and think, okay, well, this is going to take, an additional 2 years from if it was a regular B2B or B2B application. And I also think one of the problems that I see with a lot of the regulatory companies that come our way, or RegTech companies that come our way, there becomes such a huge part of such a big consultancy component to what they're selling, because they're selling into these large enterprises. They can't commoditize in ways that other B2B SaaS companies can. And therefore you have this really long cycle, first of all, up to a year to sell into a large enterprise. And then also you have to do adaptation, like you have to adapt your product. So that also kind of immediately discourages some VCs to just get involved, because that's not what their model is about.
Yeah, look, from being living here in Australia, it's definitely an interesting one. It's close to home for me. So first of all, I want to say that RegTech is not a hot topic compared to fintech, proptech, and even event tech over here. I haven't seen much definitely not have seen a direct startup in this, for example, that says, hey, I want to see, check out, we're building this product in RegTech to serve the clients. And as mentioned, like I've done some research and I wondered why that's the case. And look, when he found out that 10% of all RegTechs worldwide are currently headquartered in Australia. So the entrepreneurs are not even seeing this as an option right now. So this could be an untapped market, and only 4% of law firms are part of the associated with RegTech associations here in Australia. Being a lawyer, you want to be able to have your legals be used everywhere, especially in the digital space. So that's an example where RegTech is not something that's in front of mind for sure, at least for not investors, not entrepreneurs. But having said that, the reputation of RegTech is not, it's not like brands competing with each other. It can be easy if the government does not take monopoly, a private company can possibly come in and say, we can be able to build a reputable brand that if any app uses our regulation, our brand as the RegTech behind it, and it could be, and they've got the reputation that's positive, then they can go a long way. So that's just something I'm throwing out there, that potentially this could be an untapped market. Definitely here in Australia. We're very compliant, but we don't talk about it much. But there you go.
Understood. No, thanks for that. I guess, are there any other further comments on the matter? Ine, Kevin, anything to weigh in? All good. Okay. I guess moving on from there, I think we're also, besides this growth in RegTech, we're also seeing this growth in, ESG. Now, there was a KPMG report that highlights how, ESG, enterprise sustainability and governance, and ESG risks are becoming a much more component of overall regulation. How do you see this incorporation of ESG impacting RegTech down the line? Evan,
Yeah, so I'm very interested in ESG reporting. I've always worked partly on cases around ESG or impact reporting, but I think I see some of the same, not issues, but maybe obstacles to other RegTech companies. Like I just mentioned, the large degree of consultancy that you often need to apply these metrics, because there isn't a very specific standard necessarily yet, or or agreed upon standard, which is easily applicable, so that you're able to have this like commoditization. So I think that's super interesting. I think it's coming. It's probably right around the corner. Maybe someone has already been able to crack that code. And once they do that, I think it's gonna be super interesting, and we're gonna see a lot of growth in that space. So I think they do have some of the same challenges.
Evan, what's your take on that particular area? Given that Hong Kong, there seems to be the Chinese there's a Chinese appetite for ESG ETFs, for instance.
Yeah, really interesting point. Honestly, there's not a lot I can add to what Ine laid out. It's because I think she really hit the nail on the head. There's a lot that has to be kind of worked out in terms of guidelines, benchmarks, and standards. And we see a lot of companies that want to be the ones setting the standards. And there's some that say we don't want to set the standards. We want to just help. We just want to be helpful in enabling institutions, investors, any number of different companies, any kind of different corporate entities to be able to navigate this. And Ine put it very well that what's the ratio between kind of the what's to be solved by people and experts versus what's solved by technology. And that's a really big question. And I think it's very difficult for us right now as investors, because we find the space very compelling and very attractive, and yet it's very amorphous in terms of what does the value chain in the space start to look like, and what are the kind of venture investable opportunities within it.
John, what's your take on the ESG element?
Yeah, given that the reports recorded that 1.9 billion US has been that's the global investment activity count. It really shows that there is, someone's doing something, don't know where, in terms of digital real estate, or even the country, that the nation that is making this, driving the force. So I think that because it's still in the back burner for a lot of investors. I mean, you think about 1.9 billion over the whole investment world is very minute. It's one of those quiet things that may come in and be part of a cost, like a small cost of every product that comes out, which means that it's almost like a back end invisible investment opportunity. If it goes into that, I mean, it sounds very safe because everyone needs regulation. It's about now, can this market can you go backwards? Because, like I said, this is very compelling that we're having more regulations than ever. So the question is, if it becomes automated and we're going to get into AI and done a lot more with less human need, would that reduce the valuation or the general cost of regulations? Which means that that's only time I can see you could lose out. But in a sense, I think that overall there is the importance of this is becoming accepted by everyone. So people will pay extra, and get that as part of building a startup or something, for example. So that cost is not going to be feel like a real cost, like any other business cost. If that makes sense, the background cost that's part of building anything, whether an app or even a business that has hybrid face-to-face kind of products and services.
Yeah, I think I totally agree with that, John. I think that's a super interesting point. Is ESG something you just tack on top to make it look pretty, or is it something that you build in from the ground up and it's part of your infrastructure? And you can see, will there be ESG companies that provide that infrastructure for you, or will you kind of just build it in on your own because it will be such a huge part of your value proposition as a company? So I think that's something that founders can think about as well. And it will probably differ. Some people will do that, and other people will want to just tag it along to their other offerings. So, but yeah, it will be interesting to see. And I don't know
the fact that the world is such a big conversation outsourcing. If RegTech becomes an outsourced product, then that would be a boom in my eyes, that people would want that service done, and you let someone else handle it.
Yeah, it's just about the rails you use to make your company move faster, right? And I think that was kind of my point in the beginning with fintechs. They can actually see that they can use other RegTech companies to build on top of and move really, really fast. And maybe that's just the same thing we will see with ESG.
Okay, thank you for sharing all of those perspectives and insights. I guess now we're going to, I think, something that is really close to the heart of the matter for investors worldwide, and that's the exit activity. Since 2017, we've seen that there's more exit activity in the RegTech space, and that really has pushed the financing over the last few years. So that's certainly part of it, and most of the time is via acquisitions. So I think earlier this year we had Basis ID, Singapore-based, a Singapore-Estonian KYC startup was acquired. 70% stake was acquired by a company listed in Nasdaq Stockholm. And then I think on the ASX, there's one other RegTech KYC AML company called Kicker, KYCKR. Though of course its shares have somewhat flatlined over the last few years. Looking at that, what makes more sense from an exit perspective? Does it make more sense to seek a buyout or explore an IPO in that space? Evan, what's your take on that?
Yeah, it's a great question. And, looking at kind of the financial infrastructure and the world of exchanges and entities like that, I think is a very important locus to kind of consider this around, because the exchanges are a player in the space that kind of have that grounding in the fintech space. And so you can certainly see the way that like market data companies, market infrastructure companies that have become acquired, from a startup stage into either a larger market data company or an exchange, has kind of already been like a proven path for a RegTech company. But again, that's kind of a RegTech company in the way that we've been thinking about it, over the trailing 5 or 6 years of like a subset of fintech. But what happens if, RegTech becomes something a little bit more kind of, agnostic as far as individual sectors go? Does that change kind of what the profile of a would-be acquirer is? We spoke separately around like what other categories we're going to start to see RegTech companies kind of gravitate towards if they're not squarely focused on finance. And I think that's going to determine kind of the profile of the type of exit, if it's through an acquisition, that we're likely to see. So I think a prime example here is, companies in the self-driving car space that need a RegTech solution to be able to solve for the different kind of traffic codes and other kind of cross-border, cross-state, cross-provincial regulations as they change. Is that something that, the various self-driving car companies are going to want to solve as an internal sub-problem to what they're doing? Or do they want to go with an outside player who they will acquire, who will bring that to them, right? What does the self-driving car space, look like from a RegTech standpoint? Would they be would they be something that regulators would get out in front of to make sure that everybody was standardized, or would there be an amount of asymmetry or even a competitive advantage if one self-driving car had that kind of capability, quote unquote, under the hood, if you'll pardon the joke, and another that perhaps has a different property, right? So to the extent that RegTech becomes kind of an enabler for a larger class of companies outside of finance, we could definitely see exit opportunities of an acquisition nature. Or to the extent that it doesn't become standardized and you have multiple players in the space where you can offer an extensible solution to a variety of categories, does a RegTech company that's just flat out very good at taking like the language of laws and regulation constructed by humans and making it kind of interpreted and executed in the language of machines, does that sound like a company that could IPO? I think so. So I definitely see those routes being.
Ine, John, anything to add from there?
I'd say that going off what Evan said, I love how you mentioned that we customize all those RegTech companies can be customized or standardized, and they'll determine whether, I think if they can customize, high chance of the company that uses them will require them just to have that full speed of control to streamline faster. Or they're standardized, they're going to be attractive to government and security companies that just want to have more of a increased monopoly in that area. So yeah, it really depends on where the market, how people want to take it and how important is the RegTech. I guess when it comes to, like you mentioned, cars, safety is a big one. We tend to, I'm not sure if you think of the difference between signing up for an app versus signing a waiver before you do a physical activity. That's how I see it. Is RegTech going to be the one that everyone's got to read this to know that, all right, if something happens, we got insurance almost like covering that? Or it's just something that, all right, you got the standard procedure, like a ISO 900, you comply with the standard, and that's all we need to see. We don't need to read anything else. The lawyers can take care of that.
Thank you, John. Ine, any, I guess, closing, since we're coming to the end, any final words on the whole RegTech domain?
No, I don't think I have anything else to add. I know we're almost running out of time, so. But thanks for having us, and thanks for the great discussion.
Thank you for your time. And I guess I'm going to just exit and hand things over to Mona. Mona, the stage is yours.
Thanks, everyone.
Thank you, guys. Thank you for your time. Cheers.
Hi, guys.
Have a good conference.
I thought it was a really great conversation. Learned quite some things about investment in AI and in RegTech. And I think we're not there yet with to understand each other from a RegTech company to really pitch into investors if you're not that early stage in a certain way. So I heard some interesting stuff, and I'm very happy that you guys could elaborate from your side on your insights about the investments. So please stay with us for the rest of the day. We are now going into a break where we also have some partners presenting. And have a great day and enjoy. Thank you very much.
Thank you.
Thanks, Mona.
Have a good conference. Bye, guys.